Concept of having to go to work to gain money, to pay to live on an earth I didn't ask to be on. Yeah, it really feels like a subscription service I never signed up for. Yeah, and the trial period ended way too fast. Like 1 minute I'm a kid watching cartoons, the next minute I'm paying rent to stay alive on a floating rock. Who designed this system? I mean, work so I can afford food, so I can have energy to go back to work. It's a scam.
And welcome back to Real Estate Mindset. You guys already know this video is going to be absolutely bonkers. Today marks December 1st and the end of quantitative tightening and potentially, according to JP Morgan, the beginning of hyperinflation. So the question is, did the Federal Reserve do anything good for mom and pop? Let's start at the beginning. Quick reminder, they actually started quantitative tightening in 2018. Now, I've told you guys a little bit about that, and then they ended it in 2019. But I'm bringing that up because we had a potential inflation problem going into 2019. A lot of people forget that. But the most recent round of quantitative tightening was June of 2022. Now, let's read the purpose of quantitative tightening together so we can remember why they were supposed to be doing this to begin with. Now, there's about 4 things they're saying that the purpose is. Number 1, decrease liquidity. Yeah, right. 2, decrease money supply. And I'm going to show you guys all of this stuff here in a second. We're going to see whether or not they helped. Number 3, okay, raise interest rates. Here's the problem, guys, as you're about to find out. They didn't raise interest rates high enough to combat the inflation, and really they've done nothing at all. And the last one is to avoid inflation. So we're going to see whether or not they did any of that. But again, let's go back to 2018 because I want to remind you guys, the Fed started retiring some of its debt or mortgage-backed securities in 2018. However, less than 1 year after its initiation, central banks, including the Federal Reserve, ended quantitative tightening in 2019 due to what? Negative market conditions. Don't forget, we have a double bubble. They were trying to correct this problem before we even went into lockdowns, starting with M2 money supply. Now, when all is said and done, you guys, again, they started doing quantitative tightening or selling their assets, right? Not injecting liquidity into the economy. At least that's what they're saying. Of course, they didn't do any of that, but they started June of 2022. So if we look at June of 2022, where this first red arrow is, where this first red dot is, and we look all the way to the right at current, where that second red dot is, when all is said and done, during quantitative tightening, the M2 money supply increased. It did not decrease. It increased $656 billion. Now, to give the Fed, I guess, a little bit of credit, and when we look all the way to the left of this chart, when they started quantitative tightening, their holdings, okay, or M2 went from 21.642 trillion down $955 billion to October 2023 to 20.687 trillion. So there was initially some quantitative tightening that was working as far as the M2 money supply. But for some reason, it appears the Fed just quit doing their job in October of 2023 because you guys can see here, it went up. M2 from October 2023 to current went up, skyrocketed up 1.611 trillion. So if they're doing quantitative tightening and part of that quantitative tightening is supposed to decrease the money supply, then how can they say they did any quantitative tightening at all from October to current when the money supply went up 1.66 trillion and there's a big old WTF on the bottom there? But now let's look at the Fed's balance sheet. And here's what's important to understand, okay? Let's look at January of 2020, before the lockdowns, before they started buying a whole bunch of stuff. So before lockdowns, before the recession, the Fed's balance sheet was $4.145 trillion, okay? That skyrocketed up in April of 2022 to $8.965 trillion. That went up total 4.82 trillion when they're doing the opposite of quantitative tightening, which is quantitative easing. Now, where this arrow is right here, you guys can see that their balance sheet did decrease from April until current. Okay, so it went from April 8.965 trillion to 6.552 trillion. So in other words, you guys, okay, their balance sheet did go down $2.41 trillion. So during the quantitative tightening, the Federal Reserve's balance sheet did go down. But the problem is they're still missing the other half. It's actually exactly half. I'm not sure if an algorithm's done this, but exactly half of how much it went up from January to April is still on their balance sheet. So that's why I put in star here. What about the other $2.41 trillion that's on your balance sheet, Federal Reserve? What about that? It's still there. You did not burn it off your balance sheet at all. Here's an inflation breakdown going to 2002. And the first thing I want to point out here is there was never a month where they hit their goal of only ripping us off 2%. They never hit that goal at all. And also what's extremely alarming, and because remember, you guys, they're trying to cut interest rates. What's extremely alarming is if you look at August and September, those are months. Those are the first months since this whole thing began where inflation has been going up, not down year over year. So again, August and September inflation went up. Look, it was 2.5 in August of 2024 and 2.4 in September of 2024, but that went up to 2.9 and to 3% August and September. You guys see that right here. Now I drew a line at 2020 so that we could kind of look at why they started quantitative tightening in 2019 right here. Now I underlined May, June, and July of 2018 to show you guys that was actually extremely high inflation, so high that they wanted to do quantitative tightening. And it was just 2.8, 2.9, and 2.9. That was it. That was enough inflation to concern them. And look at you guys, the last time we had a reading higher than 2.9, I circled it right here, was all the way back to 2011. Look at this. So we had inflation of 2011 and 2018. They stopped it. You guys see that right here. In 2019, it all went down. 2020 came. It was still relatively low. And then it absolutely exploded into 2022. And although it is down from 2022, it's reversing course the last few months. So if they stop doing quantitative tightening, let me ask you guys, what's going to happen with inflation? Now, let's look at consumer sentiment to see how the Federal Reserve has been doing. I drew a line from the dot right here on the right side all the way to the left side to show you guys that consumer sentiment right now is it's actually lower than pre-GFC levels with a downward trajectory. And I put that arrow here to show you guys the downward trajectory. And remember, you guys, it's been going up. So consumer sentiment has essentially gone up since about 2009, peaking at about 2019, and then all heck has broke loose. And now this has been a downward trajectory the whole time. And my gripe is, again, the Federal Reserve is not helping mom and pop. They're just allowing the bubble to stay inflated. Now, quick market update to see how the market is reacting to this news. Again, it's December 1st right now. Now, first of all, oh my gosh, look at silver, you guys, $59 an ounce. You guys know I went into the market and I purchased silver at $29 an ounce when I took my down payment for my house and put it in silver. So, as you guys can see here, over the last year or year to date, this thing is up 101%. What does that tell us about the dollar? And look at gold right here, okay? Gold, as of right now, is close to 4,300 at $4,269. This thing is also up over 1 month, 6.38%. So nothing's beating silver. Silver is king right now. Even when we compare cryptocurrency, look at XRP today. XRP is not liking this news. XRP needs some quantitative easing because they're down 20% in 1 month. And look at Bitcoin. They also need some quantitative easing because they're down 23% in 1 month, sitting at about $85,000. Mitch, Vexler, did the Fed accomplish anything beneficial whatsoever for mom and pop? We already know they gave massive advantages to banks and non-banks, especially non-banks, private equity, all of that type of stuff. But can we say they did anything good for mom and pop during the 3.5 years of quantitative tightening? What do you think, Mitch?
Under no circumstances did the Federal Reserve in its entire history do anything for the benefit of mom and pop or society. They exist for the entire benefit of the banks to keep them in business. And I want to point something out. When Travis was showing you the downdraft of the M2, that's not the entire story. Because what in reality happened, while M2 appeared to be going down, the entire story is that the cumulative compound interest was actually going up. That was money being transferred into the banks. So what you see is a bit of an illusion where they say, well, we're going to tighten this in order to correct inflation. Okay, interesting story, complete lie. Has inflation been corrected? No. Does mom and pop have any more money in their pocket? No. What's the compound cumulative effect of the interest? Who's getting it? The banks. So the point being that, as I've pounded the table in the past, the Federal Reserve and the school districts are one and the same. They are the largest purveyors of fraud in the United States borders. Do you realize that the school districts are doing the exact same thing that the Federal Reserve is doing? Federal Reserve goes to the US Treasury, says print money. Well, school districts can't quite print money, but what they can do is commit fraud by overvaluation and thus overtaxation. The school districts go to the CADs, just like the Federal Reserve goes to the US Treasury. They create all this kabuki theater, but the net result is the fraud. The net result is the inflation. Inflation is printing money. That is a hidden tax. And when you print money, you cause the inflation because the money printed was never backed by an asset, just like the school districts. No assets. You, Pop, are the sole asset to those school districts. Your house is the collateral. We have a serious, serious problem here.
Mitch, just like the school districts, the Federal Reserve is about to make things much worse. I'm completely convinced. I know that it's not going to help mom and pop at all, but you and I also know that they're going to do more quantitative easing. They're going to print money like crazy to support the financing sector. We know that. And that brings us to our next segment, which is going to be JP Morgan basically saying, we think that everything's going to be fine because we suspect that the Federal Reserve is going to do massive amounts of stimulus. So we're going to get into that. But before I do, I want to take a break and let's go back into the streets and let's really ask this question. Is inflation creating homelessness?
Volatile and precarious, where they often don't know how many hours they're going to be getting from one week to the next. Their employers give them 29 hours a week because at 30 they would be eligible for basic benefits like health insurance or sick leave. And yeah, the cost of housing, rents are just very, very quickly outpacing what their incomes are. So that's kind of the backdrop that that defines these people's existence.
For a long time, the stereotypical perception of homelessness is that it is something that happens to people on the fringes of society. And that may have never been accurate. But what have you found out in your reporting about the reality of what it's like to be without a home?
Yeah, I mean, one really astonishing truth about homelessness in America is that what we see on the street is really the tip of the iceberg. There's this entire world of homelessness that is out of sight, that has been rendered invisible. And within that shadow realm of homelessness, as I refer to it, it is overwhelmingly populated with people, again, who are part of the low-wage workforce, who families with children. And these are people who are working and working and working some more, and it simply is not enough to secure one of life's most basic necessities, a roof overhead. I mean, to be sure, in the richest nation on the planet, nobody should be without housing.
Now, part of the workaround that they've been doing to create more inflation is just spending money that they don't have and creating a massive deficit like you guys see on your screen here. The first month of the fiscal year has updated, and it is one of the worst months in history, which to me was quite shocking because I thought we were supposed to have tariff revenue and have that top line revenue increase, and this number should have been lower. I actually went into this expecting this to finally be a negative number, like finally we're back on track, but it's one of the worst ever. It's 10% up year over year, you guys, by 27 billion. Absolutely insane. 284. If we annualize this right here, you don't even want me to annualize this, but if I do, this is over $3 trillion deficit. This could possibly be a year in 2026 fiscal year where we have the biggest deficit of our country's history. It's possible because we're already on that pace. In fact, JP Morgan's trading desk is banking on it as they've just come out with an article, and several articles actually, Sunday, November 30th. And I'm going to just kind of summarize this so you guys see how much they're banking on the Federal Reserve rescuing them. Last week, JP Morgan, along with most other investment banks, published its various 2026 outlook reports. And a few things, guys. Again, this is insane. Their global GDP growth is expected to receive a boost in H1 of 2026. This is the important thing to understand. This is JP Morgan. What do they know that we don't know? From front-loaded fiscal stimulus. Again, from front-loaded fiscal stimulus. That is inflation, that is money printing, and that is quantitative easing. concentrated in the US and China? Holy smokes. This lift should promote a rebound in sentiment because that's collapsing right now, and a recoupling of labor demand to GDP gains. How? AI spending should deliver a second year of solid CapEx gains, but there's no gains. They're losing money. What are they talking about? This is absolutely crazy. And they're also going on to say this: 2026 growth and inflation for the US are in line with this year's 1.8% for real GDP and 2.7% for core PCE inflation. Mitch, this is absolutely insane. And just because I really want to knock this point home, let's go back into the street and listen to what inflation and all of this money printing is doing to a mother who can't even afford to wash her children's clothes.
Y'all, I'm about to crash out. You got to feel like a horrible parent when your kids are asleep and it's too cold to hang clothes out because you don't have a dryer. And you got $2 that you had to borrow from someone, a neighbor, to try to dry 4 loads of clothes in 2 dryers. And you put your $2 in the dryers, and the dryer's not working. You got to be a horrible parent when you can't even dry $2. So now I got to go hang my clothes out in this cold weather and hope and pray that they dry before Sunday. I feel like crap, y'all. I just pray for me. Just pray for me. I don't want nothing from nobody. I just want prayer. Pray for me because I am tired.
Mitch, I just showed the viewers that the deficit is over $200 billion in just 1 month. And that lady just needs $2. Her entire life would change for that moment with just $2. And they're spending billions and trillions of dollars and literally just throwing it in the air and burning it. We don't get that reward. They have forgot about mom and pop. They have forgot apparently that 70% of GDP is from consumer spending. A lot of people are like, hey, consumers are still strong. Consumers are still strong. This bubble can still be supported. So Mitch, if they start printing in 2026, I laugh because I say if, we know they will. When they start doing quantitative easing and they start printing money again, is that enough to prop up the economy and create an even bigger bubble? Or is it just destined to fail and bankrupt mom and pop even more?
I just finished on Friday a book, and it this morning is out at a publisher dealing with this exact question and going back and studying history all the way back to Thomas Paine and George Washington. If we fast forward to where we are today, they can't print money. They're in a box. If they do, we will end up in the Weimar Republic. There's a high probability we will end up in civil war. I've laid that case out in these videos multiple times. I want to point out that if you take that M1 and M2 plus the current US national debt, so those 3 components, that would put gold at roughly 46,000 an ounce. If you add in the unfunded liabilities, let's call it 127 trillion between friends, that would put it up at 80,000 an ounce. Then you add to this, the first question that you asked was, is fraud creating homelessness? Well, yes, the fraud is creating homelessness. The inflation is a fraud, therefore the fraud is creating homelessness, but it's also creating socialism. And there's an article that I wrote, Travis has got it, it'll be in the upcoming video. There's never enough time to get all these things out. And I'm dealing with that socialism problem head on. But it gets even worse in that our math, which we have published, it's on the website, mockingbirdproperties.com/DCAD. It's also in the Amicus brief on that website. That's top dead center. And that Amicus brief was handed to the Texas Supreme Court. And in it, it clearly gives the math, the evidence that 37.8% of the household population across the United States, not just Texas, is in harm's way of bankruptcy and or losing the roof over their head. That's 42 million households. You can't steal people's money and think that something bad isn't going to happen. You would have to be the dumbest schmuck on the planet to think that something bad isn't going to happen. People are going to get hurt over this. It's called the War of 1776. It happened for a reason. Taxation without representation. When you, the Federal Reserve, print money, there's no army on the planet that's going to stop the American public from coming after you. Rightfully so. This is what you have done. There's also a video that we published last week in an attempt to avoid all this crap, which was Governor Abbott's legacy. More than likely, he will go down in history as the governor who oversaw the bankruptcy of the school district system in Texas. This is a reality. The money doesn't exist to pay off these fraudulent bonds. We have two problems, both of which are solvable if the politicians want to pay attention. But at the moment, they're choosing not to. And I defy anybody from inside the government to prove me wrong. We're giving you the math. We're giving you the evidence. We're standing in front of you, the politicians, saying you are bankrupting your constituents. This is a very serious problem for which there is and there must be a solution. Nobody would ever want to see a civil war. But when you have socialism raising its ugly head, that falls under this administration's watch. That falls, even though this administration doesn't want anything to do with it, but that falls under generations of problems because people have nowhere else to turn. So they think, because they're persuaded by very bad forces, well, this is the solution. We'll just steal the money. The point is, there's no money to steal. That's the point. Socialism was created by a drunk. The guy's name was Marx. Look it up. The point being, in all of these issues, nothing else matters. And I mean nothing other than the median household income. And if that household income doesn't exist to pay off the fraudulent debt that you schmucks created, we have a problem. But it won't be my problem. It won't be people who have the capability of earning money. It won't be their problem. It's the problem of the vast majority of Americans. The 1%, the 2%, they'll get by. They'll figure it out. But the vast majority of Americans can't figure it out. That's why we're doing these videos. That's why we're giving everybody this information for free. Deal with it. Do the best you can. The point is that Mom and Pop, the reason why I'm going off on this tangent, you have to get involved. The solution is political and the solution is legal. Internally, we're doing what we can on the legal side. Politically, okay, we're kind of punching in the nose politely. But the bottom line is, this cannot go on forever. They start printing money again, it's going to take a wheelbarrow of money to go and buy a loaf of bread. It's called the Weimar Republic. Look it up. These things have happened in history.
Mitch, you're a humble man, and I respect you for it. But let's not kid ourselves. We're also on the street fighting. We're also fighting bonds. We're going to other places. We're creating a curriculum, a template to show people how to do what we're doing. School boards, CAD boards, everything. We're teaching you guys that. Please take advantage of it. But here's the thing. I want to ask the viewers this question. I want you guys to comment below and let us know, what do you feel is more likely? What is a higher probability going into 2026? Is a higher probability that the civil unrest will increase, or will deflation increase? Because you can't have one without the other. It's either one or the other. If you bring back to the politicians a more affordable life, I think there's going to be less unrest. If you continue this way, it's going to collapse and destroy us all. So I want you guys to comment below, what is more likely? And Mitch, if you can, and I know it's very slow, I know we got to be careful what we say, but I've had a lot of people comment like, what's the update? What's the update? What's the update? So can we end this? Can you give the viewers, as detailed as possible update on both the lawsuit that you have with the Texas Supreme Court and the advocacy that we're working on specific to class action lawsuits? We got a few people that want an update.
On the advocacy site, we are still in the process of outlining that site with the idea of keeping it as humanly simple as possible so that it doesn't morph into this huge library like mockingbirdproperties.com. With that said, that site is specific to advocacy. And from that standpoint, the advocacy is for the class action suits rolling forward, not just in Texas, but across the United States. So it's in the works. We do have a document in that was submitted to the Texas Supreme Court, which is a request for a rehearing, and we'll see where that goes. But over and above that, I just found out this morning that there's another law firm in Houston that has taken a keen interest in this suit because they are in the process of doing something about the gerrymandering that also occurred here in Texas. And coming back to where I was a few minutes ago, these things all have solutions. And hiding, even though people have to go to work, which is one of the points that I made in the article that Travis has, hiding behind the idea that somebody's going to do this for you isn't going to help. This is all hands on deck. And to the point yesterday, I stopped in downtown Dallas to look at some of the new, as in brand new under construction apartments. And I saw a young lady walking across, and she lived in an apartment, and this had just been open for 4 months. So I asked her, I said, we just engaged her in conversation. How is it that, what sort of rent are you paying, et cetera, et cetera? And she said $3,400 a month. And I said, if you don't mind, how much are you earning? $78,000. Okay. So instantly I asked, where's the money coming from? She said, I'm getting help from my parents. I said, do you like it here? She said, no, I can't afford it, even with help from my parents. So the point of the matter is, when you drive around, and I've hit on this in the past, all you have to do is look. Look at how many vacancies there are in retail around you. Look at the industrial vacancies. Look at the apartments. Ask these people what's happening. Then you get the truth. And that's why I keep saying to the politicians, if you think I'm wrong, stand up and engage me in conversation. Engage me in debate. I'm happy to do it. But you can't, because the math is the math. So to Travis's point, what's the game? Is the game going to be eventually, in the very short term, crashing the economy on purpose, crashing the dollars on purpose, crashing the debt on purpose? There are solutions, but you're going to have to fess up and admit to the fraud. That's the point of what we're trying to do at the Texas Supreme Court. They cannot, under law, hide behind ultra-virus. They cannot, under law, hide behind sovereign immunity, because if they could, then why do ultra-virus and sovereign immunity exist? And that's the question that no Supreme Court judge can deny. That's the point to all of this, that we're doing what we can do, and that was Travis's point. We're doing everything we can do. We're doing everything we know how to do. We just have to get it into a real court with a real judge who wants to hear this case. And a lot of these problems are solvable.
I love you for that, Mitch. You're the people's champion. I'm a normal mom and pop, barely hanging on, about to go bankrupt practically. I can't even go to the AI Stargate Center that's 7 hours away because I can't afford to do it. I think for normal people, the solution on top of what you just said is mindset. It doesn't matter what class you are, upper, middle, lower, whatever. We're all getting bamboozled, and it doesn't feel good. When I wake up in the morning and I know that my money's being stolen and I cannot maintain my purchasing power, it doesn't make me feel good about myself. So mindset, you guys, absolute key. And I want to challenge you guys. Obviously, go to our websites. I'll have everything linked in the description. But if you see someone in need, don't walk by them. Stop and help them, and you will become empowered. You will feel good about yourself because you went outside of yourself. You guys, I helped someone this weekend. I think she had a seizure. I went to the movie theater. The movie theater was packed because of Thanksgiving. My wife comes and gets me because I'm with the kids. The line's huge. I'm with the kids by the arcade. My wife comes to me like, hey, we need help. I run up there. I look on the other side of the counter, and there's a woman that is laid out on the floor. This 22-year-old woman's laid out on the floor, and people are looking at me like, help her. I don't know what to do. So I'm starting to talk to the manager. The manager's freaking out, and the lines are still going. They did not stop a bit. They kept business going as this lady was laid out. So anyways, regardless, I jumped over the counter. I calmed the manager down. I figured out what was going on with her. It turns out she's probably having a seizure. I supported her the best I can, but I got to love on a stranger when no one else would. And it's scary. On top of being empowered, you guys, it's scary because what that means, out of 100 people, maybe 200 people in that movie theater, I was the only one that cared enough to jump over that counter and to help this woman. And I'm afraid if more people don't jump over that counter, then we're going to go extinct. So we need to show Generation Z especially that we need to stop, take our time, and help people because no one else will, especially the Federal Reserve and especially our government. So I hope you guys are following along. Go to the links, email Mitch. His email's in this. Send Mitch some loving words. Remind Mitch how hard it is for us out there, and he will fight for us. I love you, Mitch. I appreciate you. Happy Monday. Happy Quantitative Easing Begins Day. And other than that, guys, if you're out there investing in real estate, you guys already know we wish you luck and we hope you win.